Sorry for being so late, folks. I'm Ira Epstein with your SPDR ETF wrap-up, and this is for Tuesday, the 10th of March, 2020, about 5:51 p.m. Central Time. I had eye drops put in this afternoon, so I'm not seeing all the numbers as good as I should. But to make a long story short, we had a nice rally, a strong rally actually, late in the day, as the market heard that the president's going to do his best to maybe get rid of payroll taxes for the rest of the year, going to help people with paid sick leave, going to help in other manners with Medicare, which it appears he's gotten done for treatment if you're not covered from the COVID-19 virus. The market liked what it saw. The question is, can he get this through? And that's always hard when you've got an election year and you have a Congress that hasn't done anything constructive in years. Can they get bipartisanship for it? Not sure. I'm not even sure all the Republicans want it yet. As I've written in my newsletter, if you get it, timing's everything. It's like I personally think the Fed wasted those cuts that it did just recently. I think next week they could have gone 3/4 or a full point and accomplished the same thing with more bang for the buck. But that's my thoughts. What do I know anyways? When you take a look at what's going on in the XLK, you can see how this technology sector collapsed. What the market did prior to today, you had two gaps in the chart. I think you'd agree the market's been coming down. In fact, you have gaps up here. You filled one of them. You left this one in place. Today you started filling one of the gaps. That's about all that I see that the chart did. In terms of a trend, on the peaks of the swing line, you still have a pattern of lower highs and certainly lower lows. There's nothing bullish about that. Let's assume the market just roars tomorrow. Even if it gets up here over the 94, what was that exact high here? This was 94.66 level. You'd still have a lower low and then a higher high. Plain English, market's still in a bear trend. Now, what's happening is the key moving averages are starting to slip. The 18-day now got under that peak. What you've held is the 200-day average, which is a major moving average. It did hold it. Next resistance is the 100 and then the 18. So in other words, I still see bearishness in the market. See these lines, this black dashed line right here, follow my finger? That's a Bollinger Band, and so is that. Markets typically, I don't care what the chart is, typically 95% of the time is what I call typical. The market will trade within the black bands. You can get out of it, especially if you're coming out of somewhat congestion area, but you extended, you got ahead of the market, and it's bouncing. That's all I'm seeing so far. Momentum, well, this is important. It is oversold. So I have a market that's oversold, trying to make a stand at the 200-day average in a downtrend. Next resistance, the 100-day, then the 18-day average of closes. In SMH, which replicates the semiconductor 25 index, same thing. You got down to the 200-day average. I think the pros took some money off the table, oversold, but you've got a lot of bearishness in this chart left. And this 18-day average of closes in red, well, it's falling at the tune right now, if you look at it, about, what, would you say 80 cents to $1 a day? So it's going to be very close to, if not under, the 100-day average tomorrow. That's another bear element on this chart. It's not bullish. That's a bearish crossover on the chart if that's what occurs. You had that happen today again on the XLI, where the 18 got underneath that 200. Now, admittedly, moving averages, they're not telling you the future. They're from the past. That's what they're supposed to be. But it's also telling you how much resistance over the market there is. You have a market that is oversold. Will it embed? Both numbers here are under 20 right now. They're under 20 the day before, not the day before. Tomorrow's a key day. If you get 3 in a row, it means you converted from being oversold to locking in another leg of a trade until the red line would then pop back over 20. It's my theory. That's how I use it. In the energy sector, it looks terrible. Getting that embedded reading, you're bouncing to the right-hand side of the Bollinger Band, but nothing's friendly that I see there. I'm sure others see something else. QQQ. You came down in the big washout to the 200-day average again, and the Bollinger Band. And this was yesterday, Monday. I think pros take money off the table first time you come back from key averages like a 200 or an 18 and you come down to a Bollinger Band. I think they take money off the table. There's nothing here to tell me that they should be new sellers, by the way. You're oversold. But there's also nothing bullish on this chart. Lower, high, lower, and low. So other than the oversold condition, the trend remains down. In the emerging market ETF, we're getting a bounce, thank God. You've had a vertical price decline that just decimated this market. And remember, you lost your volatility up here, then the market went into the state of collapse. In gold, I see the market looking for direction, not there. I see, and I know everybody says, oh, it's made a 7-year high and blah, blah, blah. Okay, but it's not staying over the Bollinger Band. I'm a chartist. Throw the name off. I don't want to know it's gold. I just want to look at a chart. And I see resistance at that band, and I see something else. I have a lower low and a higher high, plus an overbought market. What defines overbought? As long as one of these numbers, or either over 70 and not going sideways over 80, it's overbought. Overbought's a filter. In other words, you want to buy overbought. I have certain rules teaching my charting course, and in that course, one of my rules is why would I do that? In the gold miners, let's go back to how the market was looking. This is Friday's action. Battleground 18-day average. Pattern, still higher lows, higher highs, and you finish the day at 29.40 over these numbers, okay. Then you fell apart Monday. So now you're not trending. You suddenly have a higher high and a lower low. You're making a run for the lower Bollinger Band. If you hit it, you know what I'm going to tell you. The first time it hits it, I think the pros are taking money off the table, if they're short. I don't see a trend here. I see a market that had a vertical price rise, a vertical decline. I'm not seeing a trend. TLT is a warning sign. Overdone. Had a big run, peaked out, pulling back. Overdone. That's what this chart says. Momentum turned down, trend up, bias up. FXE. Well, is this market also on this vertical rise overdone? It could be. I think tonight's the night you got to keep your eye on what the euro currency does. If the red line closes under 80, I'd say bye-bye. If the market stays over it, I'm still friendly. And now that the market got back under the Bollinger Band, it's going to look, before it does any trading, it's going to be looking and say, okay, which way do I go with that? So you put it together, you try to come up with game plans, and we try to help you with it from our offices. Now, what we do here is we have a staff that writes a lot of news reports throughout the whole day. We have our own meteorologist here. We have people with experience 50, 60 years. I'm in the game, just so you know, from 1969. So I've been a registered broker that long. And when I write a report, I write it in a way where I think I got your attention for a minute, 3 minutes, writing the important things, and that's it. I'm not writing every night for you a book. I don't want to do that. By the way, I wrote a book many years ago, The Psychology of Smart Trading. You might want to look it up. I wrote it many years ago with one of my friends who was a PhD. And it was a lot of fun. We did something different. But we studied people's psychology and did surveys. It was pretty interesting. But to make a long story short, we cover all this. And in covering all of that, you can take a look at what that does. You get a chance, by the way, to orally hear what our staff says. Throughout the day, we're broadcasting oral reports. They're short, they're right to the point, and I think you'd find them very fascinating. That's in our charting software. So if you go to our website, under free offers, you'll see the different things we have. Give them a try. You might like what you're seeing. Click up here. If you're watching me on YouTube, it'll take you to that page. I'm tired. You have a good day. I'm going home. Take care.